So when we have Paul on, more often than not, we're focused on talking about how we're getting first-time home buyers into their houses this time. But today we're going to talk to Paul a little bit about some mortgage options for repeat home buyers and potentially some investors too.
So, what options are available? The most common and I would say popular option for a repeat, owner-occupied buyer would be conventional. Now, one thing with conventional being repeat does require 5% down versus 3%. That is on single family homes. So keep that in mind. 5% down. Credit score requirements are about the same. Debt to income ratio requirements are similar, but it is a little bit larger down payment. In addition, on multifamily homes is where it gets a little more complex. If you're looking to buy a multifamily home, conventional financing, it usually requires 20% down. You can do 15% down on a two family. But, because you're a repeat client, you would hope that the house you're selling, you're making some money from, so you have a larger down payment. So that kind of works in your favor there. So with, repeat clients, conventional financing on the owner-occupied, those are the best options available there, anywhere from 5% down to 20%. Now, if you're looking at FHA, and this is something that most people don't realize, everyone assumes FHA is for first-time home buyers. True, most first-time home buyers use FHA, but you can be a repeat client using FHA financing. You just can't have more than one FHA mortgage at a time. So if you do have a property FHA and you sell it, you can use FHA again to put 3.5% down even on a multifamily home. So keep that in mind. Some people think you have to put down 20%. No, you can do 3.5% again on a repeat client. So keep that in mind for FHA. Another option would be VA, and obviously you have to be a veteran, but that's a great program with technically no money down even for a repeat buyer. And there's no PMI as well. We also do have something called portfolio financing. And this is something I touched upon in a few other episodes, but it's more for clients who maybe don't check all the standard boxes. For example, they're self-employed, or maybe they're a situation where, they have a cash business where they don't show all their income on traditional tax returns, W-2s. How do we qualify these people? So we do have programs that are geared towards, say, self-employed borrowers own a liquor store, pizza shop, maybe a lot of cash coming in and out. If we can show that money in bank statements, we have a program called Bank Statement Program, and it allows you to use your statements over a 12 or 24-month period. And we look at an average deposit each month, and we figure out based on that what your income really is. So these are some of the programs that are more common. There are other programs geared toward investors now we talked about next. Mm-hmm. Now, investors, it's still the standard conventional, which, as you're probably aware, single family home, it does require between 15 and 20% down, depending on your situation. But with multifamily homes, it gets a little more complex. With those programs, usually it's about 25% down, 20 and 25% down for multifamily homes. Now, those are for conventional buyers where we can, qualify them based on their tax return, pay stub, W-2, all the traditional methods. But if it's someone where maybe outside the box, we have what's called DSCR loans. These are loans where we qualify you solely on the property you're purchasing, meaning let's say you're buying as an investor a 3-unit property, let's say in Providence. And let's just say, for example, the mortgage with principal, interest, taxes, insurance, let's say let's say it's $3,000 a month. As long as we can verify the rental income, either by lease agreements in place or by fair market rent that the appraiser determines on the appraisal, as long as we can determine that rental income will be higher than what the actual mortgage is, you're qualified. 20% down, yes. But it's something that we can do, outside the box for investors that maybe want to purchase numerous properties but don't have the income on paper. And I think this is something that would be very useful.